You think your money is safe behind that massive steel vault, but it isn't protecting your wealth. It is actively diluting your life's work. Every second your cash sits in a savings account, you are being silently robbed. In the next few minutes, I will reveal the exact mathematical loophole the top 1% use to turn this trap into a massive wealth generator. We are all fed the same traditional advice: work hard, save your money. A 4% interest rate looks like growth on paper. You see the number go up every month and you feel secure. But it is a carefully engineered illusion. Think of it like constantly adding water to a pot of soup. You still have the same volume of liquid in the pot, the same number of dollars. But the nutritional value plummets. Your purchasing power drops every single time the central bank prints more money. And while your life savings are getting watered down, the institution holding your money is doing the exact opposite. To a bank, your hard-earned deposit is nothing but cheap inventory. Under the fractional reserve system, your deposit is the foundational layer of liquidity. You give them $100 and they lend out 1,000. They generate massive leveraged profits by creating new debt based on your single deposit. You are the one absorbing the silent loss of inflation. You are exposed to the fragility of their leverage, all in exchange for a tiny fraction of a percent. You take the hidden risks and they reap the leveraged rewards. The risk-to-reward ratio for the consumer is completely broken. But the elite do not play by these rules. They have an escape route. The top tier of wealth does the exact inverse of hoarding cash. They buy hard assets. And more importantly, they use debt to their advantage. For most of society, debt is a liability to be avoided at all costs. But for the wealthy, it is a weapon against inflation. Because inflation makes currency worth less over time, the wealthy borrow money today at a fixed interest rate to buy assets like commercial real estate or a business. As inflation rises, the nominal value of that asset goes up. But the amount of debt they owe stays exactly the same. They are literally paying back yesterday's debt with tomorrow's cheaper dollars. The very mechanism that drains your savings account is actively eroding the real value of their debt. They turn the system's inherent flaw into a massive engine for wealth generation. They don't try to outsave inflation. They use leverage to make inflation work for them. This forces you to reevaluate every assumption you have about financial security. We cling to savings accounts because we are biologically wired to crave certainty. But if our financial behaviors are this deeply manipulated by false comfort, you have to ask yourself, where else is this happening? Is your safe, corporate job or that comfortable, predictable routine just a lifestyle version of a low-yield savings account? Are you letting your absolute greatest asset, your time, slowly dilute just because the cage feels secure? It is time to unseal the truth. The system is a conditioned trap. And the conditioning goes much deeper than your bank account. Prepare yourself for our next deep dive. File 003, the dopamine trap.